Good afternoon, students. My name is Gertrude Namando. I'm your tutor for accounting and didactics. I will now take you through the presentation, and I haven't really gone as per question 1, question 2, but what I'm going to present here is what you have to study for your examination. Thank you. We can start. Okay, now starting with the topic on accounting equation. The accounting equation, as we know, it states the assets in the business, and then that is now similar to the money. We are now talking of capital and other assets that the owner has brought into the business. And when we are talking of money, it also includes the liability, money that the owner has borrowed. Now the accounting equation, if we look at the formula, its asset is equal to owner's equity plus liability, or asset is equal to liability plus owner's equity. Now the summary of the influence of transaction on assets, owner's equity and liability, you will find that on page 77 of your accounting and didactics module. Now it's very important for you to know how to do the accounting equation. It's very important that you know your accounting rules. When we are talking of accounting rules, we are talking of asset and expenses. They increases on the debit side and then they decreases on the credit side. And then we are talking of owner's equity, income and expenses. As we know, they increases on the credit side and then they decreases on the debit side. Now, for example, the type of transactions that are likely to be given for the accounting equation are bought vehicles and paid by check of 1,000. It's very important that in number 1, now you identify if we read bought vehicles and paid by check, it's very important to identify the two accounts that are involved. We have assets and then we have check. Now we are going to say that is bank. So the two accounts, when you identify, it's vehicle and then bank. And then you ask yourself, vehicle and bank, where do they fall in the group of account? When we are talking of vehicle and bank, we are talking of assets. And then now, when we are talking of assets, now the rules of accounting, what does it say? Asset, it increases on the debit side and then decreases on the credit side. So if we now have to do an accounting equation, now we are going to say if we have vehicle, we bought vehicle with check. Now our vehicles in the business, they are going to increase. That is, now we are going to say, when we are showing the effect, plus 100,000. That now stands for our vehicle is going to increase. Now what will happen to our money in the bank? Our money in the bank is going to decrease because we took the 100,000 to buy the vehicle. So now, in other words, the effect is only going to be on assets. And then the owner's equity, there is no effect. You don't just leave it like that. You put a 0 to indicate there is no effect. And then you go to the liability. What is happening to our liability? There is no effect because in the transaction given, there is no owner's equity, there is no liability. And it's also very important when students are writing an exam, it's very important that you do a T account on your exam paper with a pencil. So that when you look at the transaction, you draw a T account with a pencil just to help you to master which are the accounts to be identified. And then the students must go through page 77 of accounting and its didactics, just to familiarize yourself with the double entry principle and the rule of accounting. And then on that page 77, you will find the table that will give you the type of transactions that are likely to happen in the accounting equation. They'll tell you the effect, they'll tell you the transaction that they'll have given you, where will it increase, where will it decrease. Like for example, I'm only going to touch the first one and then the rest you can go on your own. Like the capital contribution, if you read a transaction on capital contribution, and then they'll tell you the influence, what will happen, the asset, which is the bank, will increase, and then the capital, which is the owner's equity, it will increase. Now, how will you show your effect? Asset will increase, owner's equity will increase, and then the liability will decrease. Now, students, if you just memorize this table, it will be very easy for you when you are given transactions. You just enter the amount as it appearing on the transactions that you are given. And then the next topic is the general journal. Now the definition of a general journal, that is now where we enter transactions that are not fitting in the books of first entry. Now the type of transactions that are likely to be recorded in the general ledger are, in number one, we have opening entries, we have bad debts, we have stock withdrawal from inventories, we have donation of goods. And then we also have interest charge on overdue account is also appearing in the general journal. We also have the purchases of fixed assets on credit. We have the interest received on overdue account. When people are making correction of errors, the purchases of consumables on credit, and then the discount that is given or it's cancelled now on a dishonored check. We must also now cancel it in the general journal. Now when you are doing a general journal, students, the first step is to read the transaction. When you read the transaction and then you identify the two accounts that are involved. And once you identify the two accounts, it's very important. Now you decide which one must be debited, which one must be credited, and then of course a narration. It's an explanation to the transactions. And it's very important to read on page 137 to 140 just to revise. It's very important now to revise on page 137 to 140 to know which account is increasing and which account is decreasing. Now, if we look at an example of transactions that are likely to occur in the general journal, like for example in 2008, that is now February the 12th, the owner took good for his own use. Now, when you read the transaction, it's very important now to identify the two accounts. That is now drawings, and then we have purchases. And then now drawings, if we look at the drawings, that is an owner's equity. And then now owner's equity, if we go back to the rules of accounting, it increases on the credit side and decreases on the debit side. So drawings will be the first account to be debited with 500. And then we have purchases, it's an expenses. And then if we go back to the rules of accounting, expenses decreases on the credit side. So that's why we credit it. So now you have drawing 500, the money you debit. We have purchases 500, the money you credit. And the narration, the reason you are now explaining what happened in the transaction, and the explanation is going to be the owner took goods for own use. You are explaining what happened in the transaction. And then we move on. The next topic is the book of first entry, used as to enter different types of transactions. We have 7 books of first entry, namely the cash book. As we know, the cash book, we record the cash and check transactions. We have the debtors journal. There we record the credit sales. We have the debtors return journal. If the debtors return good, we record it in there as credit sales return. We have the creditors journal. That is now for credit purchase, when businesses buy goods from the supplier on credit. And then we have the creditors return journal. If the creditors return goods, this is now where we record them. And then the general ledger, as we have explained it, we put in the transactions that are not fitting in the books of first entry. And then we are now having the petty cash book. This is now a book where we record the smaller cash payment. Now it's upon studying the books of first entry, when you are studying in number 1, know the definition. That is now the first bullet. Know the definition. What is the definition of any book of first entry that you are reading? Once you know the definition, each book of first entry is having a source document. It's very important that you know the source documents. In the third bullet, record the entries in the book of first entry. Sometimes they'll mix the transactions for you, and then now you must know which one goes where, and you only know when you know the definitions. And then when you are done recording the transaction in the book of first entry, you have now to post to the ledger account. As we know, the ledger account, we have the debtors ledger, where we post the debtors journal, we post it to the debtors ledger. The creditors journal, we post it to the creditors ledger. And then now the rest of them, we now post them to the general ledger. We open individual account in the general ledger, and it's very important that whatever ledger you do, it's very important that you balance off your book. Now read through page 99 to page 116 just for more information on the book of first entry, the type of transactions, and the source documents, as I have indicated. And then we move on to the trial balance. Now the trial balance is now the next book which is drawn up it's from the ledger account. Now in there, we just want to see if the principle of the double entry is correct, because there we just take the amount as they are. We take the amount, we put it on the debit side, we take the amount, we put it on the credit side. And then if your trial balance balances, and then that means your trial balance is correct and you have completed your double entry principle. But however, there are always errors in the trial balance, and then some of the errors do not affect the trial balance, but some of the errors do affect the trial balance. Now I want you to read on page 168 to 169. It's very important to know the errors that affect trial balance and the errors that are not affecting the trial balance. As we know that didactics, it's more on a theory subject, things that we have to know. So there are people are now likely to ask you if you are not drawing up books and then you are explaining what do you understand by different books. And the next topic is the calculation of accounting ratios. Now when people are analyzing the financial statements, we want, if I have a business or if you have a business, we want answers. People want answers to, when you have a business, is your business profitable? In number 2, how well does the business control its expenses? As we know, too much expenses is not good for a business because it will affect the business profit. And then in number 3, you want to know how efficient is your business operating. Now I want you to go through page 337 to 344. They've given you the more details on ratios. And very important when you are calculating ratios, it's very important, students, that you know the formula. If they want you to calculate sales, what is the formula? If they want you to calculate the current ratio, what is the formula? And then on the previous pages that I said you must start, they have given formulas of all the ratios. Now it's very important to memorize those formulas, because when they want you to calculate formulas, they'll just give you financial statement, and then knowing the formula, you just take the figures from the financial statement, and then you end up, first of all, you must write the formula, because sometimes they'll also give a mark for that, and then you follow the formula, you get the amount from the financial statement, and then you calculate it for you now to know the answer. And then I want you to go through your table of content. Unfortunately, I am not giving you pages on this one because it's like I'm spoon feeding you now. Also for the exam, read about computers and accounting. So go through your table of content in the accounting didactics, computer and accounting, find the page, read through the whole of that theory. I also want you to read just the computers and accounting. You have to know the computers. How are the computers making accounting easier? You have to go through the advantages, and then you have to go through the disadvantages. And then the second part, I want you to read the qualities of a good teacher. Now sometimes they will ask you about qualities, sometimes instead of qualities they ask about characteristics. As an accounting teacher, what quality must you have? And please, student, very important, as I marked the previous examination, I have seen that the students are not studying the module, but they want to give general information which appears in any subject, and then you lose out on marks. And then I also want you to go through the PowerPoint presentation. Now go through your table of content, find out where the power presentation, where the page is, and I want you to go through power presentation. How does it make the subject accounting easier? And students, as I have indicated earlier at the beginning, accounting didactics, it's a theory subject. That is now the methodology that an accounting teacher must have. And please, students, I emphasize, I'm very disappointed in your previous exam. You are not reading your modules. For you to pass this accounting didactic student, read your module. Whenever a question is asked, give the answers as they are appearing in your modules to earn mark. Stop giving general comments. You can contact me on my email. That is now gertrude93@gmail.com. And my cell phone number is 081-2846-312. And then you can contact me from 6 o'clock up to 8 o'clock. And let 8 o'clock be the cutting of time, please. And don't contact me during morning hours. It must be on the hour as indicated.